Hello traders. Welcome to KP Technical. What are support and resistance? Bullish market. Buyers in control and market moving in up direction forming higher high and higher low formation. Bearish market. Sellers in control and market moving in downward direction forming lower low and lower high formation. When the price moves up and then pulls back, the highest point reached before it pulled back is now resistance. Resistance levels indicate where there will be a surplus of sellers. When the price continues up again, the lowest point reached before it started back is now support. Support levels indicate where there will be a surplus of buyers. In this way, resistance and support are continually formed as the price moves up and down over time. The reverse is true during a downtrend. Market trading in range, upper boundary acts as resistance while the lower boundary acts as support. These are areas where support and resistance levels are relatively close and price bounces between two levels for a period of time. Experienced traders will sometimes trade within these trading ranges, which are also known as sideways trends. One strategy that they use is to place short trades as the price touches the upper boundary and long trades as price reverses to touch the lower boundary. People who find it difficult to draw trend lines often will substitute them for moving averages. As you can see from the chart, a moving average is a constantly changing line that smooths out past price data, allowing for an easier identification of support and resistance. Few examples of support and resistance on real chart. For more stock market updates, subscribe KP Technical.